Hello, I'm Rhonda Porter, Loan Officer of New American Funding, and today I want to talk with you about how much cash is needed to buy a home. First time you're going to need cash is probably going to be with your home inspection. A home inspection is a good idea so that you can have the home checked out for any possible defects. A home inspection is different than an appraisal, and an appraisal does not check for these certain home defects either. The cost of a home inspection can range from a couple $100s to $700 or more depending on the property and the different inspections required. Now, the home inspection is an upfront cost that you'll pay for either before submitting an offer on the home that you're interested in or perhaps just after your offer is accepted. You should be prepared to pay the home inspector directly upfront, as this is not part of your lender fees. The next cost you're going to encounter when buying a home is going to be your earnest money deposit. An earnest money deposit is a check that you're going to prepare and submit with your purchase and sales agreement when you make an offer on a home. I surveyed local real estate agents and they tell me that right now you can expect to pay anywhere from like 1 to 3% on a typical transaction, and this is based on the sales price. The earnest money deposit will be applied towards your down payment and or closing cost. Now, there's some homes that are very competitive and they might require an even higher earnest money deposit, and in some markets the earnest money deposit may be non-refundable. In a traditional transaction, you'll have clauses that may protect you in the event that your transaction does not close where your earnest money may be refunded. This is something to discuss with your real estate agent before making an offer. The next cost with buying a home is going to be the appraisal. This is a third-party fee as the appraiser is independent from the lender, and so sometimes you might be paying the appraiser up front or directly. The cost of the appraisal is really going to vary depending on the type of property and the type of transaction. And sometimes an appraisal can be waived depending on the type of automated underwriting response on a conventional loan. If it's not waived, you can probably expect to pay anywhere from $500–600 on up. Now, the biggest amount of money that you're probably going to have to come up with during a purchase transaction is going to be your down payment. And your down payment can really vary depending on the type of program that you have. So there are programs where there is zero down payment required, such as for a VA loan or for a USDA financing. And then there's other programs with conventional or FHA where you can do as little as 3 or 3.5% down. So you don't need a 20% down payment in order to buy a home. And this percentage is based off of the sales price. If you have less than 20% down, then you will probably have mortgage insurance unless it's a VA mortgage. So these are things to think about while you consider buying a home, and meeting with the loan officer can help you determine what program might be the best suited for your needs. Next up are closing costs. Closing costs are one-time fees that are associated with the purchase of your home. And so some of the fees are lender fees, and then there are also fees that are third-party fees, such as the title and escrow fees, which are based off of the sales price and loan amount. And then again, the appraisal fee is one of the things that we discussed just earlier. And then there are some lender associated fees like credit report processing, underwriting fees. And so a lot of this is going to depend on your loan amount. So it could come to a couple $100. The title and escrow fee is really going to vary based off sales price and loan amount. So it's really good to get a quote from your loan officer so you can see what an estimate would look like for your absolute closing cost. Then there's also reoccurring fees associated when you purchase your home too. So the lender is going to start what's called a reserve account or an escrow reserve account. And it gets a little confusing because escrow is also a word that's used for the closing company. But typically for for a reserve account, it means that it's for the taxes and the homeowner's insurance are going to be collected in advance to start a reserve account. So typically you can count on roughly 6 to 8 months of the property taxes to be collected, and then about 14 months of the homeowner's insurance, so your annual premium plus 2 months. And again, this is to start the cushion. The lender can pay property taxes and homeowner's insurance for you on your behalf, and then they'll also be included in your monthly mortgage payment. Another closing cost to consider too are points. Points are used for either buying down your interest rate, or sometimes you can use it for a rebate credit with negative points, just depending on what's available in the market. So whether or not you should be paid points is again another good discussion to have with your loan officer. So one thing to consider too with all the closing costs, the prepaids and reserves, is that sometimes the seller can help contribute towards that if it's negotiated in your purchase and sales agreement. And also some of your costs can be paid by a gift from family members too. So there are different ways to get around this to help reduce the funds needed for closing. So I'm Rhonda Porter, licensed loan officer with New American Funding, and I would be happy to help you with the purchase of your next home.